What's going on, guys? It's the Bulls and the Bears here with a weekly game plan video for the wheel strategy. I'm going to talk about some names that we can sell some puts on at some decent levels and collect that premium and realize that profit. So first, we're going to talk about SPY quick and what to expect from the overall market, because that can change how we want to go about the wheel. We might be a little more passive with the wheel if things are looking bad in the market. Maybe just take the entire week off. We could go as far as that. In my case recently, when we had this massive downtrend and we were making new lows and stuff, I played it very conservatively by building small lots of shares, basically dollar cost averaging into a position rather than just selling a put and getting all 100 shares at one level. So that was a way to work around or work within a really bearish environment. Right now, we're pushing up strongly. SPY looks very bullish in the short term right now. We are hitting some near-term resistance from what I see. Go down to the hourly chart. I see this as a supply zone up here, 390. We already stalled out up there. Will it become resistance or act as a resistance and sell off? It could, but I really don't see us completely selling off to like new lows or anything. I don't know if this would be the top of this recent rally. I think it could sustain this a little bit longer, maybe consolidate and be range bound in between 390 and 380. I don't see us plummeting. And hell, we could even just rip right through it and go straight to 400 and maybe the top of this overarching descending wedge. This huge wedge here that's drawn out from the highs back in January to now. There's 3 points of contact. That's where we rejected last time. We could be on our way back up to that trend before we start to make another new low, because I do think we will make new lows. But it's just a matter of how far will this bear market rally go. And I think it still has some life to it. So I'm comfortable selling puts this week for the wheel strategy. So let's just get into some of the names. We'll start with ZIM quick because I'm already in this position. You can see on the bottom of the banner, ZIM cash secured put for next week. One contract at the $21 strike. So that's the yellow line. I sold that on Friday in preparation for this week, and I'm happy with it. I got $40 for it, and I think you could still play it. If you are interested in playing it, I don't think Monday is too late. Hell, if it gaps down, it could be even better. You could even get even better premium at 21 or get an even more favorable strike lower, maybe at 20. So we'll have to see how Monday looks. But I'm already in this, and it's part of my personal plan to average down my original 100 shares, which are sitting up here at 3607. 100 shares. I need to get another 100 down here, and my average will be around $29 per share, which would be nice. Let's just see exactly what that would be. So 3607 plus 21. Well, actually, $21 minus the premium I got. So really, my average on the new 100 shares would be 2060 plus 3607 divided by 2. So my new average would be 2833 on 200 shares. That would be a dramatic difference in my position. So I'm really trying to get filled down here, and I'm just going to keep selling puts until I do. The 21 strike looks nice. Even if I didn't have an existing position, I would still like these levels to sell puts at. Moving on to DOCU. I'm going to continue to play this one because I want to get into it for the long term at these levels. I'm looking at the 43 strike. It's paying about $30 per contract, and it's just about near that pivot low, that recent pivot low where we should expect to see some support. Even if we don't in the near term, I still think it would be a pretty good price point for the long term. If you want to be a little bit more aggressive and get additional premium, the 44 strike seems fine as well. That's paying $41 per contract. That's originally what I wrote down, the 44 strike, and I might actually play that. It depends how we gap. If we gap up, then the 43 strike might not be paying enough, and I'll stick with the 44. If we gap down, I might pivot down to the 43 strike because it's probably paying more premium at that point if we gap down and sell off or something. We'll have to see. The game plan can easily change given how the market opens on Monday. That's why I leave my Twitter down in the description, because if you want to know what I do and when I do it, give me a follow there, because it might not always be exactly how I game plan it on the weekend because the gaps and whatnot changes things big time. Las Vegas Sands, I'm sticking with this one. I just sold the 34 strike last week. It expired worthless, kept all the premium there, and I'm looking to play the same exact strike this week. Because right now the option chain says the 34 strike is paying $31, and I think that's pretty good. Again, the gap can change everything, but as it stands right now, I'm looking to play the 34 strike again, and it's at a good area of support. I like where it's at, and we get the RSI up. I don't know why that went away. Nothing significant with the RSI on this one, but it's nice to look at. But yeah, this is a good area of support, I think, at 34, and I'll be happy to get assigned, and if I don't, I'll be happy too, just to keep the premium. TPR is a new one that I haven't been trading. I think I maybe sold one cash secured put on it. It was like a one-off back in a few months ago, but I'm looking at it again at the 30 strike. This is a daily chart, and we've been consolidating nicely pretty much all month in this range between $32 and $30, with $30 being nice support of this consolidation. So why not sell a put there? Looking at the $30 strike, it's paying $20 per contract. Given my rule of thumb to have each position be a quarter of my account, I could sell 2 contracts at the 30 strike, and it would be well within my positioning. So I could collect $40 total on this position, which is very nice. And I think it has a good chance to expire worthless. It's been holding up very nicely in this range. If it does crack down, I don't expect it to move too far down. It does have earnings coming up soon, so that could either be good or bad, depending on where we get assigned and whatnot. But at the very least, I think this is a fine area to sell a put at. And if I have to roll it down and out to a 29 strike, if things look bad, then I'll do that. Because we are nearing that near-term support. The low right here, as low as 28, and even down here too. There was a big collapse there, but it got as low as about 26. So if I have to roll it down and out to 29, I think that's still a favorable zone to own this. So 30 strike for Tapestry. And then the last one is Nordstrom. So this one I'm not like too crazy about, but it seemed to be one of the better ones that I could find for that, one last name to talk about. Looking at the 1850 strike, it's paying about $12 per contract. For a price this cheap, that's not bad. I could sell as many as 3 contracts and bring in $36 premium on the name, which is very good. I could play the 19 strike. The 19 strike, if I move this line up to 19, is just below or just at the 50 moving average, the 50 daily moving average. So that could be support as well. It's been holding up above 19 for the past couple weeks, and I'm just looking for it to stay up there for one more week. I don't know if I'm going to play the 19 strike. I don't even know if I'm going to play this name 100% yet. We'll have to see. But if I do, I'd probably aim to be a little more conservative on this one and play the 1850 strike just to give us a little bit more wiggle room, a little bit more cushion. The 19 strike is paying $18 per contract, which if I did 3 of those would be about $54 total premium, which would be very nice, as opposed to the $36 premium at $18.50. But I'll probably just play $18.50 if I do, because this isn't necessarily a pivot low or anything. That would be way down here at $16.50. So better to just give a little bit more distance. But that's if I play it at all. I'm still not 100% certain that I'll play it. But I do have the room in my account to do so. If I don't play it, then I have a lot of buying power sitting on the sidelines, which isn't always a bad thing, but it's nice to put money to work if you can. So Barrick Gold is another one that I've been trying to get into, that I really want to sell puts against, but it's too elevated off key levels that I would like to sell puts at. It's not giving me enough premium, so I'm just gonna have to wait on that a little bit. Pfizer is also one that I've been wanting to get into at these levels down here. I sold one at 41.50 a couple weeks ago. I still have that line there. And you can see why I wanted to get filled down there, why I thought selling puts down there would be good, because look at it now. Up, and away. It has earnings next week. You can see how this area has been holding up. It literally double bottomed perfectly off the 41.50 area, going as far back as October of 2021. I don't think Pfizer is a name that's going to completely collapse in this bearish environment. I think it's one of the names, one of the sectors and industries that will do more favorably. So unfortunately couldn't get anything there, and it's too elevated for me to sell puts on it now. In fact, it's almost overbought. So, but we'll keep it on watch because I do like the name, and if it gives me a good opportunity, I will make sure to take it. And that's it, guys. So let me know what you guys think in the comments below if you have any names that you're going to be playing. If you enjoyed, hit the like button, subscribe for more content, and as always, I'll see you all next time.